So, hi there, a very good morning, good afternoon to all of you, depending on wherever you're watching me. This is Simply Stocks, and I'm live in this session with you all. And hopefully, you're watching and hearing me properly. In this live session, and this is going to be a 20-minute session that I'm going to have with you. So, basically, what I'm going to do is discuss with you four picks that are going to do well, hopefully, this summer. And these picks are top of the class companies, top notch companies that have been doing pretty well over the last, you can say, 2 3 years, and are set to do better, apart from one company that I'll discuss now. First of all, a disclaimer that this is not a stock recommendation. People taking any position to any share that I talk about should do that with their own due diligence and research. So I hope you're hearing and watching me properly, and you're watching the screen as well. The four picks that I have brought for you one by one. Hopefully, I'll answer your queries as well. Kindly use the super chat and super sticker feature. That will help me grow the channel. That will help you also ask me questions and eke out answers in greater detail. Uh, so let me go through each pick one by one. The first one, as you would have seen, is Symphony. So I'll do a small technical analysis and a little bit of fundamental analysis on Symphony, and will let you know uh, as to how things are with respect to that company. All right, so let's start with Symphony. So Symphony, which makes water coolers and different types of coolers. Now it is wall-mounted coolers that they are preparing. The market cap of the company is around 6,800 crores. It is trading at 46 47 at a PE of 46 47, and has been under pressure, as you can see with this chart. So if I take out a 3 year chart, I'm sorry, it has not done exceedingly well. In fact, if I take out a longer term chart on it, then you'll understand that at some point in its, you can say, stock life, it was at 2000 rupees or so. This was in 2018. And over the last 4 years, in fact 5 years, the stock has done virtually nothing. So those who have bought at say around 1700, 1800 levels are still waiting for their prices. But let me just take out a 1 year chart, and the stock is coming back. So basically, the support here lies with this golden crossover that is about to take place at around 933, 936. And so the support is around 930. It is looking fine. And so technically speaking, 930 is your stop loss, and you can take a trade here. Fundamentally speaking, we are still waiting for the December quarter numbers. The September quarter numbers were out, and sales went up by around 20%, as we see here. And the margins, although it dipped by around 14, the margins came out to be 14%, but they were still better than the 10% margin in June. So what has happened is probably the margins are bottoming out for good. We could see another 14%, 15% number in the next 2 quarters, and from March onwards, things could look up. So on the numbers front, yes, numbers are not that great, and we are looking at a situation where December quarter numbers might still not be that great. But I still feel that Symphony as a stock might be bottoming out on the margins front. So if you see here, 10% margin was in the June quarter, which was one of the best quarters for the summer season and etc. But still, the margins dipped to 10% because of higher inflation, crude prices, transportation cost, many other reasons were in there. But now things are looking better with 14% margins in September, as we see here, and even operating profit at 37 crores, better than what happened in June. So things are looking up. That's what I feel. So this is a calculated risk that somebody can take now with the stock trading at 40 45 times, because if you see the PE ratio for the stock, it is trading at its lower end of its PE range. So 58 59 is its normal range over a 5 year period. Even on a 3 year period, the stock has done probably 55 rupee. 55 is the PE, and it is under that. So looking attractive now. Symphony is a buy, you can get 20 30%, 20 to 30% move in each of these stocks. That is my assessment. So probably somebody can look at Symphony in that sense. The second stock that I would like you to look at is Voltas. Now, this was provided to Patreon members about 2 weeks back as well. In fact, at the start of January, it has moved since then. So that is why it's better. I mean, if you are looking to make money big time and do well, probably get into that membership as well. The chart showed that we could not go beyond below 720, 725. So my stop loss was 725, and we are looking at 1000 plus levels on Voltas coming through, and now it is stabilizing above 800. The stock was given somewhere around you can say these periods of around 23rd 24th of Jan, so about 2 weeks back. So it is looking good, although your if you look at a 1 year chart, the stock has done virtually nothing. It is down from around 1200 levels all the way. It fell to around 750. Numbers have not been that great, but again a stock that is now coming back out after a hiatus, trading at three times sales, 27,000 crore market cap. It has reduced from 40,000, 45,000 earlier. If you look at the numbers, so technically speaking, looking strong with a stop loss of 750, one can take a trade. On the numbers front, September quarter numbers, they did around 1766 crores sales versus 1690 crores. Uh, so there was a slight increase year on year, although again margins were under pressure. So 6.5% has become a 4.5% in here. So the margins have remained under pressure, and that is probably why the stock has not done well. But it is expected that because of lower raw material cost, etc., I think we could look up on that margins front going forward. Let's wait for December quarter, but one can start accumulating. If you look at the reserves front, from March 18th at 3800 crores, we are at 5500 crores. Not a lot of debt. Debt is around 390 crores or so. So that means they are doing extremely well on that front. And I believe that going forward, this could end up being a dark horse. If you look at the shareholding pattern as well, there have been a dip in FII holding from around 26% in March of 2022. In the last 9 months, it has dipped to 22%. But DII holding has increased gradually. It dipped till December 21, but increased since then and around 31.5%. So looking fine, Voltas. I'm not saying that it's going to just blow the daylights out of the market or something, but you can get around 20% in the next 2 3 months on Voltas as well. One good results would propel that stock in a few days towards that 1050 levels. So Voltas is my second pick. The third pick in this list that I would like to talk to you all about is this one, which is an interesting stock, Varun Beverages. This is a stock I hold in my portfolio, so that's a disclaimer. But currently at 1286, just came out with its December quarter numbers. It has run up, so this is a stock that you can buy around 1220, 1230 on dips. But even at current levels, it is not that bad because its high was 1430. And if you look at on a PE basis, because of the kind of numbers that it produced in December quarter, the PE has not moved anywhere. So it's trading at around 52, 53 times earnings. On a long term basis, it is at its you can say average of 54, but I believe the PE should expand to around 65, 70, and the numbers are beginning to pick up. So first of all, technically speaking, I feel that the stock has done pretty well. But if you look at a 6 months chart of Varun Beverages, it made a high of 1430 or so at the start of December, and since then it has been consolidating and just recently have broken out from the 50 DMA, which is 1230. So one can buy here even on dips to 1250, 1260. One can definitely buy with a stop loss closer to somewhere around 1180 or so. So one can buy here with a 100 rupees stop loss at 1180 and look for 1700, even 1650, 1700. But I think 20-25% can be made. If you look at the numbers per se, in the December quarter, what they did was 2200 crores, which is a steep jump from last December where they did around 1730 crores. So again, it was a jump of 30-35% year on year on the sales front, and margins have remained robust. 12% margin in December 21 versus 14% this year. So in fact, margins have improved year on year by 200 basis points, and that is what I like. Although quarter on quarter it has dipped, but that is a seasonality at play. The March quarter numbers would be even better, but their yearly numbers are from December to December. So if I look at December 22, they had a overall profit of 1550 crores versus 750 crores last year. The profits have doubled, more than doubled, and the EPS is now at around 23 rupees versus 10.7 rupees earlier. So things are looking up. We believe that the company can grow at 35-40% going forward for the next 2-3 years. So it's a very good long term buy as well on dips. But currently with a stop loss of 1180, one can buy around 1250, 1260 and look for a 20-25% stop loss. So that makes it to around 1500, 1550 is our target in the next 2.5 months. I think the stock could do exceedingly well in that respect, looking extremely good. Uh, so that's Varun Beverages, and so we have the last one, and this is Blue Star that I want you to look at very closely. Although the stock is going up every day and has been performing, making new highs, but the stock is trading at 52-53 times. Again, a company that has produced stellar numbers, and that's why the stock is moving up. I won't say you buy here. Probably in the next 2-3 weeks, if you see any dip in the stock that brings it closer to 1280, 1260, that is where one should look to buy between 1260 to 1280 on dips, around 100 rupee day, 5-7% dip. That is where one should be looking to buy. Now, why we are seeing such steep move on Blue Star? We look at the December quarter numbers, and we have a situation where it did sales of around 1790 crores or so versus the last year which they did 1510 or 1510 crores. 91 crores of operating profit has risen to 104 crores, and margins have remained stable at 6%. That is what the street has liked for the December quarter. There has been other income, interest cost, etc., and eventually they did 80 crores versus 70 crores last year. So again, a 12-13%, 15% increase in profit before tax, and eventually doing 58 crores of profit versus 48 crores. So a good enough 22% growth in net profits is what we are seeing in a quarter which is extremely weak for summer stocks for companies that are into AC and coolers, etc. So very strong numbers. What we are looking at is, if in March quarter they did another 20% move, then we are looking at 9.5 rupees EPS for the March quarter. So if I calculate their yearly EPS, estimate their yearly EPS, then we are looking at somewhere around yes, so somewhere around 27.7 rupees. If I take 1400 as the current level, then we are looking at the stock trading at 50 times, which is not at all expensive. It's not very cheap, but it's not expensive at all. And I'll tell you why. Because if you look at the PE ratio of the company on a 5 year basis, the average comes out to be 47-48, and on a 3 year basis, the P ratio average goes up to 60. So I think it can easily trade at around 60-70 times. In fact, it used to trade at 100 times in FY21, and then everything has dipped. So if I take 27.7 rupees and say that it should trade at 60 times, we are looking at 1660 as a target in the next 3 to 4 months on the stock. Any dips to a 1300, 1280 is a buy for a target of 1660 with a stop loss at 1200. I think you should be looking for a good upside, but not at these levels. Probably on dips, Blue Star could definitely be something to be looked at for sure. All right, guys, so I'm ready to answer your queries. Kindly use the super chat and super sticker feature that will help me grow the channel, that will help you also ask me questions and eke out answers in greater detail. Uh, all right. Let me see the queries coming in. Voltas or Blue Star? See, it depends on Ravi. It depends on what sort of a time horizon that you are having at the moment. Uh, I feel that if you have a couple of years of time horizon, if one result of Voltas comes out to be good in December, I think we are looking at Voltas doing extremely well. But I believe that on dips to 1300, Blue Star looks very good from a long term point of view. So that's the call on one of these. So that's the thing. So Vankeys is something of a trading play. Whenever the moves take place, then you get ahead and buy into Vankeys. Now, since the stock is down 30% from your price, wait for a move on Vankeys and then probably exit the stock rather than looking to hold on to it from a long term point of view. It is like a trading stock altogether. A random maneuver, the results were not that great. I believe one can accumulate on dips to 1100, 1050. It's not a stock to sell at these levels. But on dips to 1100, if you get a chance in a very difficult market, one can definitely look to add something like a maneuver. I prefer Volta's Blue Star compared to Symphony. No questions here, sir. Well, I think Symphony is something that has gone out of favor completely, but I have a feeling the way the margins have panned out in December, I think things could get better for Symphony in September. Sorry, so things could get better. So that is where the investment is not there for most investors, where the money is not there. That's where the money is made eventually. So Symphony is totally out of favor. The company has been a dog of a stock for the last 4 5 years. I think it could definitely go up. Say 100% over 2 3 years, the way if the numbers pan out. But Voltas do look good. Voltas is a more pedigree kind of a stock that has performed over years and has had probably a difficult 1 year, but I think Voltas comparatively as a company is a better one. So yes. Is it good to enter ICICI Bank Reliance at current levels for the long term? I think Reliance for sure. I don't know much about ICICI Bank. I don't cover banks that much. But I feel that you could definitely look at Reliance at these levels from a 3 4 year point of view, can give you 60 to 70% upside over this 3 to 4 years. So that's a call. A random map my India has is having a lot of difficulty with higher competition, and I have mentioned that earlier in my live sessions as well, that they are in trouble, to say the least. So any move anywhere, whenever a move happens 15 20%, this is not the time to exit. Probably whenever some sort of a move happen on Map My India, that is where you should be looking to exit the stock altogether. Yes. PSU banks like SBI, Bank of Baroda at currently. SBI is fine. I think the one PSU bank that I would say that somebody can accumulate. I won't say Bank of Baroda or anything else. With whatever that is happening with the Adani Group and many other things, I would say better to be in private banks. If you have SBI, hold. If you don't have, probably look at private banks if you prefer banks. Otherwise, there are many sectors to invest into which are looking good. IT is looking good. Some pharma stocks are looking good now. So that's where one can definitely keep an eye on. So that's my call. Why Johnson Hitachi, Whirlpool, etc. are not performing? What's ailing? I think competition. I think Johnson is in the same field as you can say Daikin and other AC and Panasonic, and AC is into. I think air conditioner sector is going through a lot of competition and their margins are getting hurt, and that is why Blue Star is flying at the moment because they have maintained the margins and increase the sales. So that's where the value and volume growth is taking place probably, and that is where Johnson Hitachi is losing out. Whirlpool is losing out big time on washing machines with other brands. In fact, many brands like Xiaomi has got into it, and many other brands have got into it. So there are issues with these companies, and that is where probably in my opinion long term investing is probably good for 3 to 5 years, but not 10, 15, 20 years unless you have a extremely marquee top notch brand, and even in there it's not a given that you'll make money. So if you have bought into even an Asian Paints, Pidilite, Titan, etc., probably there you could escape, but not in other stocks. So that's the call. To other sectors, or should I hold on to it? Stock down 5%. So Deepak Nitrite, I would say exit. There are a couple of companies in the chemical sector that look good because of it, their expansion plans. If not, get into the consumer sector that is also looking good. So that's my call. Probably Deepak Nitrite is not the place to be in. Any rise you can exit, you can exit here. Uh, you can get into IT. I still feel IT is at the beginning of a major move, probably from second half. If you have a 2 3 year time frame, IT, mid cap IT especially, can do extremely well. But be very careful. Buy into companies which are producing decent results in the December quarter, rather than buying into companies which have nosedived in the December quarter numbers. All right, guys. Thank you. Thanks a lot for being online. Please like and subscribe my channel and hit the bell icon so you can get my videos straight away when I post it. And kindly support me on Patreon. The link is in the description. These are the links, the email address. If you want me to analyze your portfolios, if you want me to look at your stocks, you can email me. We can work things out with a fee. Become a Patreon member. If you can't, then you can be a WhatsApp member from a yearly basis. You can email me for that. Become a member on YouTube as well. Thank you.